Crypto is going to get bigger. Stable coins are going to become really, really, really big.
You became millionaire through poker when you were 20.
In a way, poker is very like crypto, where you see people who make money very quickly, very young. Today, we're a very well-known fund. At that time, we were nobodies.
How you can create a small fund.
So probably the minimum that you need to raise is probably 15 to 20 million. As a VC, a lot of your job is not just finding deals and picking deals. Then there's winning deals, and winning deals comes from having value add. And if you can't win, that means you only get the leftovers from other people's investments.
What was the worst and the best investment ever?
In venture, it really doesn't matter when you make a bad investment. What matters is not the things you said yes to, but the things you said no to. Those are the really big mistakes.
Will markets grow, or it is already on its peak, having President Trump coming to the scene?
One thing that I've learned from being in the space for a long time is that it is very difficult to predict the future. It's not important to be able to predict step 1, step 2, step 3, step 4, but it's important to just pick the right direction and let the momentum carry you as the technology starts building forward.
Hello everyone, our guest today is Steer Fund that has $5 billion under his management. Haseeb, hello. We studied a bit your biography. And what we found interesting, that you became millionaire through poker when you were 20. What got you interested in poker and card games in general?
So I started playing poker when I was 16. Actually, the story was that a few friends of mine invited me to play a poker game, and I didn't know anything about how poker worked. And I lost all my money very quickly, and I got really pissed off that I felt very stupid. And so I decided, okay, I'm gonna go home and I'm going to research how poker works, what the strategy is, what the rules are. And I learned that there was this generation of young poker players who were playing poker professionally online, and they were making tons of money from their college dorm rooms. And I thought that was so cool. And it almost was like it was like a video game, you know, and I thought, oh man, I think I'm smart. I bet I could do that. I was too young at the time to play poker because you have to be 18 in the US to play poker online. And so I asked my older brother, who was 18, to lend me $50 so I could start playing. Now when I remember I called him, I was like, hey, can you lend me $50? And he was like, what? You're trying to gamble? What are you doing? You should be in school. Like, you know, never ask me this again. And I was like, all right, screw you. And so there was this website called Party Poker, which was one of the big online poker sites. And they had this promotion that if you scanned in your driver's license, they would give you $50 for free to get you to start gambling. Now, I didn't have a driver's license, but this was the early days of Google image search. And so I went online and I found the first picture of a driver's license, which was an old lady from Maryland. And I sent her a picture in, and that's how I got my first $50. And so I started with $50, and I worked my way up playing 5-cent, 10-cent games, 10-cent, 25-cent games, 50-cent, $1 games, slowly grinding until I turned $50 from the beginning of the year to the summer, turned it to $4,000. And by the end of the year, I made $100,000. And that was when I realized, like, oh, I think I can really do this. And so I dropped out of school and I started playing poker full time. And that's how I started my poker career.
What was the biggest sum that you have won and lost in poker games?
So it's funny. I don't actually remember any of the biggest days or the biggest losses, but I think probably the match I played where I won and lost the most money was I played 501K blinds against Gus Hansen, which is a $100,000 buy-in game. And I won against him, but I think the biggest hand I won was probably $250,000. And biggest hand I lost was probably $200,000. So it was one of the most intense games of my life. But back at that time, Gus Hansen, he was like a very famous poker player, and but he was really quite bad. He was very famous. He was on TV all the time, but he wasn't very good. And so I made a lot of money from him.
How old were you when you realized, yes, poker is good, you can earn money through it, but I need something more? What helped to form your decision that poker is fine, but now it is time to focus on some real business?
I was 19 years old when I became a top-ranked poker player. It was around that time that I started to really get disillusioned with poker, where I no longer really felt all that motivated, because I realized very early on that a lot of my friends who were poker players, they had a lot of money, but they weren't very happy. In a way, poker is very like crypto, where you see people who make money very quickly, very young, mostly young men, and they believe that, oh, if I have enough money, then the girls are going to like me, my parents are going to respect me, my friends are going to all look up to me, and then they have the money, and they realize that none of those things are happening, or they realize that the money alone is not enough to really make them satisfied. And so I learned that from a very young age, that money doesn't really make people happy. The people who are going to be happy, like my friends who were in college, they were totally happy and they had no money. And my friends who were all poker players, they were all miserable and they were, losing tons of money, going ups and downs all the time. And they were eating badly and they were awake at night and sleeping during the day. Um, and I came to appreciate that poker is not really a way that you can make the world better. You can't really add value to society. Um, as a poker player, it's a very deep strategic game. I believe it's a very beautiful game. I think you can learn a lot from the game of poker. But I think if you make your living taking money from people who are bad at poker, somebody sits down at a poker table across from me and they're a doctor or a dentist or a lawyer, and they come sit down at a poker game and I take their money. They were doing something valuable for the world to make that money. All I did was I was better than them at a card game. And that really, I struggled with that for a long time. And I realized that I knew I didn't want to be a poker player for the rest of my life, which for a lot of the people I know in poker, they wanted to be a poker player. I kind of fell into poker as it's something I got really good at just because I'm kind of a crazy person and I love being competitive. But I wanted to do more with my life, and that was what ultimately led me to in 2011. There was a lot of other stuff that happened around that time, but when the Department of Justice shut down all the online poker sites outside the U.S., you had to leave the U.S. in order to continue playing poker online after 2011, and that was when I decided that it didn't make sense for me anymore to continue on this road. And so around 2011, there was a friend of mine. Ironically, he's now in the crypto world, whose name was Jose. And he was a student of mine. I was coaching him, mentoring him. And he ended up cheating a bunch of people. So he basically stole their money without them knowing. And I defended him to the community and said, hey, I think you guys should have him pay you back privately and not go public with the fact that he cheated. And this ended up becoming a big scandal. And the fact that I tried to defend him made people really turn against me. And that was a big moment for me because I was very, as a young man, the only thing I'd ever done with my life was play poker. It was my whole identity. And all of a sudden, everybody in the community thought I was a bad dude, that I was complicit with him and cheating. And, in retrospect, it was a big lesson for me about the importance of one, being very transparent, only working really with people who you can really trust and really work with. But also it was a real lesson in like where my sense of self really came from, in believing that I was doing something valuable for the world and valuable for other people. And I realized that poker was not that. It was not the place where I really felt proud of myself or proud of the ways in which I had changed the world or changed lives for other people. And so I decided to quit poker. I gave away most of the money that I made as a poker player, and I started over, deciding that I wanted to do something more valuable for the world. And that eventually brought me into the tech industry and eventually into the blockchain space.
And to whom? Were they your friends or homeless people?
I gave away my property to my family. So I owned a bunch of houses that I bought with my poker money. And then the cash that I had, I donated about $500,000 to mostly to people in deep poverty in the third world. So I'm a subscriber to effective altruism, which is this view that you can do more good for the world by giving your money away to people who are in extreme poverty in faraway parts of the world, where it can have the most impact. And so that was something that I really started to believe and learn more about after I quit poker. And so that informed a lot of my decisions of where to give my money.
Cool. I really think it works like that. I think it is the law of the universe that if you have the ability, in your case that would be money, and you helped people that really need it. By the way, our team also tries to help people. We also do charity, though I don't want to call it charity. We help when we have the ability. When we earn some, we donate. For example, recently, we help orphanages, individual orphans, and also animal shelters in Vietnam. I got a friend who lives in Vietnam, and I lived there as well for 4 years. I really like this country. And there are people who genuinely don't have anything to eat. Really bad. Or for example, abandoned kids. We try to help, give away $10, $20 or $30,000. This is one of the areas that we allocate money for. And we do not expect anything in return. We do that just because we have the ability. So you were done playing poker. What happened next? How you got interested in investments? How did you start? Or you just started trading? And when exactly did it happen? Which year?
So I was actually working on a startup in 2017. I was building a very, very early stablecoin. We were having acquisition conversations with some of the big exchanges. That this was before USDC, before Gemini Dollar, before all these guys launched their stablecoins. One of the acquirers was very close with this guy Naval Ravikant. Somebody recommended to me that I go talk to Naval to get advice about how to go through an acquisition. And so I go and I meet Naval through this introduction, and I say, oh, hey, we're thinking about getting acquired by this company. What advice do you have for me? And he told me, well, honestly, my advice for you is don't do it. And I was like, what do you mean don't do it? And he said, no, you don't want to go work for one of these big exchanges. They're so boring. You'll be run by legal and regulation and blah, 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 and never do anything interesting. You should become an investor. And I said, what are you talking about? I'm running a startup. Like, why would I become an investor? And he said, look, crypto is a crazy industry, and you don't know what's going to happen. You don't know how the whole thing is going to play out. All you know is that there's a wave that's coming and it's going to be big. And so if you're building a startup, you are one little grain of sand in a wave, hoping to make it to shore. And you have no idea whether you're going to make it or whether your wave is going to die out and end up in never making it to shore. But if you're an investor, then you get to pull up a chair to the beach, sit down right there and watch all the waves come in. And it's the best seat in the house to watch the wave that is going to come. And so he ended up convincing me to shut down my startup and join his fund as a GP. And that's how I got my start as an investor.
So your first significant involvement with crypto when you were working with Naval, or you have created Dragonfly right away and started investing?
So I started with Naval as a GP and started investing out of his fund called Metastable Capital. We're one of the very first funds in crypto. And when I was at Metastable, I did the seed round of Avalanche, seed round of Near Protocol, seed round of Mina, was early into Starkware, Filecoin. And it was while I was at Metastable that I ended up meeting my partner who would now build Dragonfly with me. His name is Bo. He was a big LP into Metastable. And he and I built a relationship, and we decided to partner up together to build a very different kind of fund than what Metastable was. And that fund ended up becoming Dragonfly.
So when exactly Dragonfly was formed, which year it was, and what was your first investment, to which project, and what was the amount, how much you have raised?
I came into Dragonfly in the middle of our Fund 1 fundraise. So they'd already raised some money before I came in. But I came in, basically within the first year. So I joined formally in 2019. Dragonfly, the very first deal I did at Dragonfly was I did the seed round of Matter Labs, which was the zkSync. We ended up creating zkSync. So that was my very first deal. And our first fund, we raised $100 million. But that was a very, very difficult fundraise because that was after the ICO bubble had collapsed. So nobody wanted to invest in crypto at that time. When we decided to build this fund together, crypto was still very hot. Things seemed really good. We thought we could get the fund together, but when I actually joined, it was so rough. It was so difficult to raise that first fund because nobody believed in us. People didn't know who I was. And so we just scrimped and scraped every, $1 million, $2 million, $3 million check that we could get to 100 million. But in retrospect, that first fund is absolutely incredible. So, in that fund, we invested into Bybit in that fund. We did zkSync. We own a bunch of ETH and Bitcoin, of course, which did very, very well from that time. We were in Compound. We were in MakerDAO. We were in 1inch. We did a bunch of great investments at that time. That was also the fund out of which we did Tornado Cash. So It was kind of it was a crazy time, but it was also, at that time, people didn't know us that well. We weren't, you know, today we're a very well-known fund. At that time, we were nobodies. And so we really had to earn our way into every single investment that we made back in 2018, 2019.
So basically the projects that only now enter markets, like zkSync, MakerDAO, Avalanche, you have invested in them back then, 2018, 2019. So it was a long-term investment. Why I am asking these questions? Because we sitting here may think that it is obvious. I just want to show people how exactly funds make their investments. It's not like you can buy it and then 5 minutes later you sell it. This is not an exchange. These are early stage investments, like pre-seed investments, angel rounds, things like that. That's why I ask simple but detailed questions, because people find it interesting. How exactly do you raise funds? How it is really done? Do you call some friend? Hey, I've got a project, let's invest $100,000 each. Can you please tell about these things in more detail?
So I'll walk through each of those steps. So first, to be a VC, you have to go raise a VC fund. And to raise a VC fund, you need to have some credibility, relationships, you need to have a track record to show people that, hey, if I take your money, I'm going to spend it wisely and get into good investments. So you go around to, folks who have money. So whether that's family offices, these are like, basically very wealthy people who have money in their families, or you go to institutions, so like, universities or hospitals or foundations or whatever, or corporations that have a lot of money on their balance sheet, and you go raise the money. And then once you have the money, then you can go invest. So how do you invest? Generally, the process as a VC is you have a team. So, you're never just one person if you're managing a lot of money. And your team is going out talking to people all the time. And you're talking to different founders, you're going to demo days, you're going to incubators, you're reading Twitter, you're seeing, your job is to go find deals first and foremost and see who's out there, who's building stuff. Then once you find the deal, then you need to do diligence. Diligence is very different depending on the kind of company. If it's an exchange, the diligence is very different than if it's a protocol. So for me, most of my investments are on the technology side. So I'm reading white papers, I'm looking at code, I'm trying to understand exactly what is being built and how does it work. And I'm sitting down with the team. I'm getting to understand who they are, what motivates them, why do they have this idea, what's unique about this idea. And then if we decide that we want to invest, then you have to win the deal. So if you decide you want in, a very good founder is not just going to give anybody money, right? Or take anybody's money. They decide, who do I want and what are they going to do for me? As a VC, a lot of your job is not just finding deals and picking deals. Then there's winning deals, and winning deals comes from having value add. So the value add for us is anything from, we help you with relationships, help you with recruiting, we help you with strategy and thinking through your positioning or your marketing or how to design your points program or your tokenomics or whatever. And so all of these things go into why somebody wants to take your money. And once you check all those boxes, you raise the money, you found the deal, you picked the deal, you won the deal, then you actually get the upside of the investment. But until you have all those things in place, there's a lot of VCs who can raise money and can diligence stuff, but they can't win. And if you can't win, that means you only get the leftovers from other people's investments. It means the ASICs and Zs, the paradigms, the Dragonflies, they invest in the best stuff and somebody else doesn't get the rest. So a lot of the job of VC is to do your own branding, is to do your own, is to make your own name unique and special the same way a company does. And if you succeed in that, then you have a shot at being a great investor and getting really good returns.
Me personally and my team as well. For us, it's really interesting to understand how you can create a small fund. We also would like to create a fund and invest in projects. Maybe we will take leftovers after funds like yours or other funds, but we really would like to participate and make our own contribution to assist with money, educate people about the projects, and support these projects on early stages. So what exactly do we need to do to get started? Do we need to acquire certain license? Or there is a minimal capital that we ought to have? What kind of team do we need? How many people? How we can get started? We are really interested.
So to raise a fund, if you're not just investing as an angel, if you want to raise a fund, probably, I've seen very, very small funds, but they're generally not enough for you to just do that as a full-time job. So probably the minimum that you need to raise is probably 15 to 20 million. If it's below that, you really can't afford a team. You can't, because usually most of these funds, they pay themselves 2 and 20, meaning that they take 2% of all the money you raise every year, and you get 20% of the profits. So if you raise, just to give simple numbers, let's say you have a $10 million fund, you get every year 2% of that 10 million. So 2% of that 10 million means $200,000 a year that you're getting if you have a $10 million fund. So $200,000 a year, maybe you probably need a finance person to help deal with some of the stuff. You need to pay for legal, you need to pay for an office. So with $200,000 a year, it's not that much for you to have a team. If you have a $20 million fund, you have twice that. You have $400,000 a year. That's probably the minimum that you need in order to really be able to set up an actual team that's doing this full time. But a lot of people, they can sometimes raise what are called microfunds. So a microfund is, you raise $2-3 million from some friends, and it's you still have a full-time job. You can't really pay yourself just 2 and 20 off of that. But it allows you to just write little checks here and there. You write 50K into some of your friends, you write 100K into this thing that you hear about. And that's a way to get started. For the most part, the main thing that you need is you need a track record. You need some proof that you're good at this, that you have access, that you can get into deals, and that founders want to work with you. And the primary way that you do that is to really get good at venture. The most important thing you need to do is to be different. Because there's a lot of people out there who want to give money to great founders. A lot of people. And you're not going to be the best from day one. There's no way to be the best from day one, because a16z and Paradigm and people like us, we've been doing this for a very long time. We're very good at what we do. But what you can do is you can be different from us, right? If you take what's different about you, what's different about your value add, what's different about your network, what's different about how you can service a founder, then a founder can say, you know what, a16z is going to lead, but I'm going to give 50K to you because you're doing something for me that a16z can't do. That is the way that you get started and start developing your brand. In the early days of Dragonfly, that's what we did. In the early days, nobody wanted our money. Nobody knew who we were. We were a bunch of random guys who, didn't have a brand, didn't have reach, didn't have social media following, didn't have anything. And so the way that we justified our value add was that we would do things that nobody else could do for you. And because of that, we got to a 50K check, 500K check. Not, we didn't lead the round. But by doing that enough times, you end up developing a reputation. You get into good deals. People see, oh, you're in this one and this one and this one. Oh, you must be good. Here, I'll bring you into my new round. And you build your way up by getting more and more credibility and having founders say to other founders how great it was to work with you.
Say you give money, invest in some project. What project teams expect from you? They're gonna have your Dragonfly logo on their website. As one of the backers, what are your other responsibilities? Do you need to promote it? Do you need to attract users? What other kinds of work that you need to do, aside from financing? And how we can collaborate with you?
Okay, so the value add Dragonfly provides in the early days was also very different than what it's like today. Today, we're a very large platform. We have about 45 people today within Dragonfly. We manage about $4 billion. And our portfolio support team is probably one of the best in the industry. So we help on things like hiring. We have a dedicated team for just hiring. We have a data team. We have a security team. We have a regulatory team. And so we help our portfolio companies with all the different aspects that they need in order to understand how to build a company, scale it, and get it to market. We also have all the relationships with the exchanges, the custodians, all of the service providers in the industry, like auditors and so on, that we can get people preferential discounts, access, whatever it is they need. The other thing that we're known for is because we're a very global fund. So we have a big office in Singapore and we have an office in New York. And we also have relationships with all the big exchanges in Asia. So many of them are our LPs and they're our close partners. And because of that, we're probably more connected to a lot of the distribution in Asia than most of the US VCs who are more US centric. So that's another thing that people look to us for, is getting access to the Asian market. In terms of fundraising, so we're a pretty large fund, and our funds are also we're very highly regulated. So we're regulated by the SEC as a registered investment advisor. And so that means that we're actually only allowed to take investments that are very large size, sort of has to be minimum in the millions of dollars. And they have to be from people who are accredited investors or qualified purchasers, which it's kind of regulatory jargon, but basically it means that they have to be big boys in order to invest in us. So we can't take money from like friends or from, just go on TV and say, hey, we're raising money for Dragonfly, put money in here. In the US, those are very, very regulated to be able to take money from ordinary people. You have to be like a mutual fund, or you have to be like one of these ETF or something like this in order to take money from normal people. And VC funds, they generally are not allowed to do that. We're definitely very supportive of getting our portfolio companies. So we invest in a lot of these companies like, Monad, Mega ETH, Kaito, Lighter, Ethena. These are a lot of our portfolio companies, and all of them want to have access to global markets. And so that means like CIS, it means Asia, it means Middle East, it means LATAM. And so if you guys are very good at getting the message out and helping your community to learn about these projects, then our projects are going to want to work with guys like you. So we're happy to find more ways to get you in touch with a lot of these founders when they're early on and when they can benefit from coming out to your community, sending their message, and educating more people from your community about what they're doing.
Well, that's nice. But we prefer to work with funds directly. With big funds, game of the highest level. That is what we would like to achieve. So yeah, we have heard you. Thank you for your advice. Please connect us with the projects that you talked about. We would love to work with them. What was the worst and the best investment ever?
I'd say our best investment probably has to be Ethena. So we led the Ethena seed round and the Series A, and we've sort of continued buying on the market. That's been probably the most successful investment we've made. Maybe closely tied with Bybit. Our early investment into Bybit has also been a pretty incredible investment, where we led the Series A of Bybit back in 2019. Worst investment, the funny thing is that in venture, it really doesn't matter when you make a bad investment. So if you invest into a project and it goes to zero, because we invest in like 40, 50, 60 companies in a single fund. So if 1/40th of your portfolio goes to zero, it's kind of, who cares? It doesn't really matter. Even when you make bad investments, it doesn't matter. What you learn most of all is that what matters is not the things you said yes to, but the things you said no to. Those are the really big mistakes. So for me, the biggest mistake that I made in terms of P&L was I passed on the Solana seed round. And Solana seed round, that was the 4-cent round, right? And that would have been the most legendary investment in history. Obviously, Multicoin made that investment, and it's an absolutely historic fund. And then the other one that I really regret was the Uniswap Series A. I passed on that at 100 million valuation, which now it's whatever it is, 10 billion. Very like a lot of things I invested into, you invest at some price, it goes to zero, but you only lose the money you put in. And in venture, that just doesn't matter. But the things that you say no to, those are the things that keep you up at night, that really mess you up.
Okay, so we talked about you as a fund, we talked about the ways to collaborate with you. I would like to ask, can you share a couple of words about the state of the market? What do you think gonna happen with markets till 2030 on a global scale, or say up to 2035? Will markets grow, or it is already on its peak, having President Trump coming to the scene? He has really aggressive position towards crypto. We cannot really understand him. Maybe you do. Maybe you have some insights about the markets in general. Should people hold on to the cryptocurrency that they have bought? Starknet, for example. There are many concerns about Starknet. Towards which areas people should pay attention to? Maybe layer 0? Or maybe coins of some game projects, GameFi? Or maybe decentralized exchanges? What would you say to ordinary people who has $5 or $10 or $100,000? To which area they should pay attention to?
One thing that I've learned from being in the space for a long time is that it is very difficult to predict the future. And you can be directionally correct and be wrong on all the details, and that's good enough. So if you look back at 2018, 2019, when we were investing into early DeFi, right? DeFi really took off in 2020 with DeFi Summer. But in 2018, 2019, things like Compound and MakerDAO and 1inch, they were tiny. There was very few people using them. And we realized that DeFi would be big, it would grow, it would become something big. But we were totally wrong how it would happen. And the same thing is true with stablecoins. We knew stablecoins would be big. We were totally wrong how it would happen. And I've learned over time that it's not important to be able to predict, step 1, step 2, step 3, step 4, but it's important to just pick the right direction and let the momentum carry you as the technology starts building forward. And so for me, the very obvious directions are crypto is going to get bigger. DeFi is going to continue to become a larger and larger portion of CeFi. Stable coins are going to become really, really, really big, and every company in the world is going to be embracing them. And so you want to be along for that ride. Now, what exact assets, what exact instruments, I don't know. That's going to change over time, and it's impossible to guess in advance. So you want to have a broad portfolio. You want to be exposed to different things, and you want to change your mind as quickly as possible. Because one of the things you learn in crypto from being long enough is that the reality changes. You go from Biden, the most aggressive president in the world, to now US loves crypto, the government's buying Bitcoin, blah, 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 blah. Same thing, oh, the metaverse, GameFi, da, da, da. No. Stable coins, TradFi, treasuries. So your ability to move quickly is the most important predictor of your ability to be on the right side of the technology. That's my 2 cents to anyone, is to don't get too married to any individual idea, pick the big trends and follow along for them for a long time.
We didn't have enough time. Our guest is a really busy person. Thank you for watching. Please hit the like and subscribe.
Thank you so much.